Hello everyone, I'm Dr. Lambeau. Price fluctuations in financial markets create peaks and valleys. Simultaneously, these peaks and valleys are also formed in the technical indicators. These peaks and valleys are often essential turning points, signaling the rise and fall of prices. Today we're going to talk about some of the valley forms you often see: Golden Valley, Silver Valley, and Death Valley. To begin with, let's understand what is a golden cross and a death cross. Suppose a fast-moving average crosses over a slow-moving average to the upwards, with the slow-moving average progressing upward. In that case, it signals a bullish crossover called the golden cross, also known as the gold fork. Oppositely, if a fast-moving average crosses over a slow-moving average downwards, with a slow-moving average progressing in the downward direction, this signals a bearish crossover called the death cross, also known as the death fork.
If you want to watch the full version of the video, you can go to TradingLive or download the TradingLive app. Share it to your friends and learn for free.